If you have student loans and the payments are deferred, but you are also wanting to get qualified for a mortgage, listen to this video. I'm going to talk about how a mortgage company would factor in a student loan payment into your budget in determining what you qualify for. So depending on what type of loan that you're going to get, this will determine what type of monthly payment is going to be estimated for your student loans. For instance, Fannie Mae loans require you to use 1% of the balance of the loan if you're not making payments and your payments are deferred. So for instance, on a $10,000 loan balance for student loans, Fannie Mae will have you use $100 a month in your budget for your qualifying for your debt to income ratio. If you're getting an FHA loan, a Freddie Mac loan, or a USDA loan, the calculation is going to be 0.5%. So on that same $10,000, by using one of these loans, the payment estimate would be $50 a month. VA loans do a funky calculation. It's a little different. They use 5% of the balance divided over 12 months. So for that $10,000 owed in student loans, 5% would be $500 divided by 12. That's just a little over $41 a month. So depending on what type of loan program you're using will determine what type of monthly payment will be estimated for your student loans. This is going to be important when you get qualified for a loan. There is something you can do. Fannie Mae loans do allow for an income-based payment plan. This is something that you might want to look into if you're going to qualify for a conventional loan and you want Fannie Mae to be an option. You can reach out to your student loan company and ask them to calculate to see what your income-based payment plan would be. A lot of times this is lower than this 1% or 0.5% or 5% divided by 12, depending on what loan program you're doing. The other thing that I want you to remember is even though everybody's student loans, or not everybody, but a lot of people's student loans have been deferred, these payments are going to come up. So keep an eye out for when your payments start so that you don't accidentally miss a payment and then have a negative hit on your credit report, thus giving you a lower credit score. So it's really important to pay attention to this. If you have any questions on this at all, please reach out. I am happy to help.